Well, hello, hello, hello. Welcome to Money Talks with Ayanna Smith, and I am your host, Ayanna Smith. And today, whenever you are watching, we would love for you to take a listen. Listen, get some people on because we want to talk about some different ways you can build up with life insurance. Of course, I talk about that, but let's jump right into it. So we're going to make sure we give you a moment to get your pens, your pencils, and if you need to get a crayon or two, get that as well so that we can make sure that we are getting into the mix of things. All right. So here we go. Here we go. We're going to change it up a little bit and kind of jump right into looking at what we're talking about the impact of having and utilizing life insurance. Because when we find out those impacts of having it, yes, it's more than just having enough to put us away, put us in the ground, however people want to say it. Excuse me. However people want to say that, but it's more about making sure that we know what we can do with it and know how it can function and help us in the long run. So, basically, some things that we're going to go over, cover, and talk about a little bit let's say before we really jump all the way in. I will say that my name is Ayanna Smith, and I am a licensed financial professional. I am also a life insurance broker. I help people, educating them, making sure that they know things on the personal side as well as the business side. I want to make sure that you are fully covered and fully understanding how just that basic old life insurance that we often know and hear about and sometimes shy away from because we're not fully invested in the depth of what's going on. It lets us know that we can do more with it and that there are more opportunities to expand. But before we really jump into that, we want to look at how we can make sure that it is the impact on our lives, a good impact on our lives on having life insurance and learning how to utilize it and some steps that will go into that leading up to that. We're going to jump right in. And as I said, of course, you can always connect with me through askayanna.com just to start out at the top to make sure that if you have any questions about anything that you hear, you see now or later in the replays, make sure that you send me a question and we can get on the books together to talk about what's going on. All right. So see all my friends and family out there. Hello, hello. All right, here we go. So let's look at this. The first thing that we want to do when we're talking about, let's go to my list. We wanted to talk about some empowering strategies. So, of course, the impact is going to empower us as well on building the roles or having life insurance and utilizing it. And first, understanding that we want to create, and it can create, life insurance can create this financial independence. It can create financial independence through the point of if we have the right kind, meaning if we have the permanent life insurances, like the whole life, universal life, um, index universal life, even variable universal life, the VULs, IULs, ULs, and the whole life, WL, those types of insurance, that type of strategy can build wealth for you if you are putting away enough money and also over time. It's time and money that makes the strategy really pop, kick, and boom. It's if you start a policy when a child is young, then of course they'll actually have money by the time that they are down the road years later, just by simple compound interest that will allow monies to have been created, built, and readily available when the child needs the money. If they're going to college, if they want to buy properties, whatever the case might be, that's money that can be extracted. Instead of having to go to the bank, you are the bank. You become your own bank in that mindset. So if we keep the mindset going on, we're going to build our own banks. That's one way to look at how life insurance can be a viable strategy. And know too, I say this in my book. I have my Building Wealth book, and the Building Wealth book, my chapter is it's an anthology, and I'm a lead author. My chapter is Life Insurance Are Not Curse Words, and they are not. Life insurance is just that. Insuring the life, and it is something that's insurance while you are living, even heart attack, cancer, stroke, living benefits, long-term care, all those things while you are still here can be tapped into and built, all in addition to building your wealth and building a supplemental strategy for even retirement. And on children's side, building for their future, and on the adult side here, it can build for our future as well. Of course, we know time is on our side. When we look at things traditionally, time will be on our side when we are younger, yes, but it's no time like the present to get started and build where you can, and start when? Today, right now. Absolutely. So let's go on further to our list as we look at how we're going to understand the importance, first of all, of that impact of life insurance. And before we get into it, I always like to share that, giving some overview on, of course, setting some goals, because here's the thing: we often look at financial strategies to build wealth, and then we put particular emphasis on them. But some of these things right here, before we get into how to build that life insurance acumen, if we could say, some essential parts of life insurance, or the aspect of life insurance, I would say, are these things right here. We do have to set some clear financial goals. So we have to make sure that we are setting goals that are attainable and that make sense for us. And sometimes people say, well, I don't know where to start. I always tell people, well, listen, start at goaling, Goaling, goaling yourself to say save, saving 1,000, 2,000, $10,000, whatever your goal is. Strategize on how much you get paid, how often you get paid. If you're an entrepreneur, you know how much you're making from different things that you're doing. Determine how much you're going to put aside for yourself. I look at there's a rule called the 10-10-80. I picked that up through the years, looking at you 10% for your tithes and charitable giving, 10% for your savings, for for yourself to build up, and then you live off of 80%. And sometimes people kind of wrestle with that, but I really have found when you do take that time to contribute to yourself, contribute to let's say contributing because of the benevolence of God, basically, that helps us. That's a way to look at it in that manner, to pay what we're supposed to, and to offer what we're supposed to offer in that regard, with charitable giving, whether it's to your church, charitable deeds and all that stuff to different organizations. Make sure that you're giving that, and then the 10% for your own savings, whether it is in IRAs and IULs and all these, let's say all of the alphabet. Nonetheless, it's still learning how to put the money back into our pockets, and learning how to help it to grow by planting it into appropriate places. And that's what's really going to help us get longevity as things go on and things move forward, help us to move forward. So as we're moving forward, let's look a little further. Okay, we're going to set clear financial goals. So that's one of the first things we're going to do. And then I've talked about several times also too, developing a budget and sticking to it. And sometimes that sticking to it is like, because life does happen. Things do happen, and that's where the financial goals, the sticking to the budget kind of go together, but then they flow into building that emergency fund, and the emergency FUND, the emergency fund, because sometimes we like to have emergency fund FUN, and that's not an emergency. That ends up sometimes creating a catastrophe if we are not cognizant of what's going on or paying attention to what we're doing. We'll just frivolously do this, that, and swipe, and not do the accounting part of it. And we have to account for the things that we have coming in and going out, or it will be an imbalance in our budget, or the lack of a budget. So that's one, set clear financial goals. 2, develop a budget and stick to it. 3, build an emergency fund. And of course, we hear the rule of thumb with the building the emergency fund, 3 to 6 months of income. But I do like to tell people, listen, track your expenses first of all when you're developing that budget, and then you'll look and see what's going in and what's coming out. And sometimes we don't even realize, wow, our emergency fund, we're eating, drinking, and driving it sometimes because we've been a little excessive for what we actually have on hard numbers. And when we don't look at our numbers, then bottom line, we can't see them. It's kind of simple and trite, but we can't see what we don't look at. Okay. So present company, I understand. I'm just like, whoo, it drives me nuts, but I have to look at it and face the music and then move forward, which leads us to number 4, investing wisely. Now, once we set those clear financial goals and we talk about what we know we're going to take care of in our households, our business as business owners, developing that budget on both sides, business, personal, creating the emergency fund, business and personal, then we can invest wisely. And that is how we're going to invest personally, how we're going to build ourselves up for supplemental income, building up for our retirement income. If we're working a W-2 type job, then how are we going to supplement as we're going along to be able to, when we're ready to transition out, retire from, resign, however we need to do it, release ourselves from that regular W-2 and go into that full entrepreneurship, if that's what we desire to do, or we're going to run them together, it still has to be that plan and investing wisely. So that's investing your money, that's investing your mindset, that is investing your time, that is putting all those things together to figure out what is going to be my comprehensive plan. How am I going to make sure these pieces connect together? How am I going to put the puzzle pieces together so that they make sense and so that I can start moving this thing? It's like building a car or going outside and fixing a car. You're thinking about, I think about some of those the old uncles that I know and grandpops that had those cars sitting out in the yard, and they were fixing them and they were digging in and all that good stuff. Hello, Daphne. Fixing the cars and all that good stuff. And they had to put the pieces together, but they could not get that thing running if one piece was off. And that's how it is with us. We have to get all of the pieces together. We have to really look at it and look at the basic data and own it and be okay with it. This is where I am, but this is where I want to go, and this is where I'm going. So we put it in an active mode. We are going there. We are not just going to sit there and just get paralyzed, because sometimes when you agree, we get analysis paralysis, meaning we'll look at it so much or cover our eyes so much. We just think, if I cover my eyes, I can't see it. That means it'll go away and it won't happen. Not so. So that means we have to look at it for what it is. Look at our numbers for what they are. Look at how much we have going out, coming in. And if we need to, let me let you in on a secret. I say this often because I know it to be true. The extra money that we're looking for is already in our purses. It's called our hands. It's already in our hands. So whatever our gifts are, that is an avenue to make money. Okay, so just keep that in mind as we move forward a little bit more and keep going on our ascent before we get to our descent for tonight's topic. Okay, so after we invest wisely and we've made those informed decisions, consider consulting a financial professional to help you to do that and to shell those things out. And I don't mind sitting down and talking with you and going over some things. It is what you say, no judgment zone here. It's just helping people pull their heads out of the sand like I had to pull mine out of the sand. Yeah, still pulling it out because it's always something that we have to look at. And I don't know everything, so I then talk to people to help me to do the next thing, the next best thing for my situation. Because one thing to remember, everybody's situation is their situation and it's personal, but it is not so personal where we should be petrified by talking about it. So let's get in a space or get in a vulnerable enough spot that we can talk about it and be okay and not ashamed about it, because what we can talk about, we can't be held hostage to. So sometimes people, want to hold us hostage to a certain thing or what they knew about us and this and all that. We can go there. But if you tell it yourself, who can hold you hostage to something that you have identified and decided that you're going to that you're going to let out? And yes, like taxes, absolutely not changing, other than going up. Absolutely, taxes are going to go up, and we cannot change them. But we can only change by making a way of adding on more income as we delve and dig into our gifts and our talents and our abilities. Okay, that is really the best way I can describe it. We have to dig in, and we have to dig in and make sure that we're doing what we need to do. All right, awesome, awesome, awesome. Okay, thank you very much. All right, Levon, how are you? Good to see you. Okay, so let's move on a little further here. All right, so now we've just to recap quickly, we're going to one, set clear financial goals. Two, develop a budget and stick to it. Three, build an emergency fund. We're going to invest wisely, number four. And we're going to now, number five, protect our assets with insurance. So that leads into really, we did all that opening, but that kind of leads into now what we're talking about on how important the impact of life insurance can be. And know that, hey, life insurance are not curse words. They really can be a great diversification strategy. We have a lot of things that we can put our monies into, yes, but life insurance, if we qualify for it, if we are able to get some type of coverage, it is a very, very imperative and pertinent piece to our overall portfolio. And it is one of the, I would say, most sustainable and safe, a safer way of diversifying and supplementing your income. So, and also a plug here, even entering into the financial industry, the life insurance industry can help you to really establish and boost your income as well. And if you need to talk about that, please, I invite you. Well, let's have a conversation, quick conversation to get you on your way for that. It is really something to consider. It is a regulated industry. It is a licensed industry. It is not doable. It is a doable industry. Most people I know, if you're listening, most people, you already are in a vein where you have things that you are doing, that you are accountable for, that you're accountable to. This would be a breeze. It's just knowing how to make sure that you are handling things correctly, ethically in an ethical manner, and you're learning what you need to do to help others. And hey, it's a win-win all the way around. All right, so let's keep going as we're moving on. All right, let's go. So, protecting your assets with life insurance. Now, we can say this. Sometimes this is one, life insurance, how's that going to protect me? It's one that's overlooked. It's overlooked because life insurance is a vital tool when you are protecting your loved ones and preserving your wealth in the event of your untimely death, but it also provides a tax-free death benefit that can replace lost income, because when people pass away, the income usually passes away as well. I haven't heard too much of a company that continues to pay the salary of a deceased employee. I don't hear about that too much. You let me know if there are some companies that do that, and that is where we need to kind of look and focus. But for most part, when that person passes away, then the income is gone. And so the life insurance will help ensure the family's financial stability. It really will. I mean, it's something is better than nothing, but we want to make sure that we can maximize and get as much as possible, as much as we can budget for, as much as we will stretch out and put, what we say, stretch ourselves to obtain and get, so that we'll have something in the time of our need. And also, like I said, it will help us not only when the loved ones need it, but it will help us while we're living if we have the appropriate type of life insurance strategy. So we need to sit down and talk about that and see what's going to be best for you. And when we're looking at going into the understanding the importance of life insurance, here are some key reasons. Our big talk as we come in and hit it hard and get out. Okay. We're going to understand the importance, because here's the importance. Here's the importance. Here are about 5 things that will tell you about the importance of your life insurance. Okay. It will provide income replacement, as I was just saying. If a person passes away, this is a way that the income can be replaced, at least for a few months, if not for a few years. And then if you get that life insurance sum of money benefit to come in, then there's also other ways you can diversify that money, like annuities, or getting other life insurance policies, or putting money in IRAs, different things like that, to continue the growth of that money. We're even looking at now, and I insert this because I'm going to have a whole big I'm going to do some, and you tell me too, some people type in some things you want to see, because I'm putting together something that I want to have, that we can come together face to face and do some stuff, as well as some virtual, if we can do that. But people have been asking me different things about trusts and wills and all that. We need to talk about these things, and we need to continue to talk about them, and know that we'll be in a safe space to get those things hashed out and moving forward in those directions, so we can be at peace and we can feel at peace while we're still here, and know that when we're gone, these things have already been put in place. All right. So first, the preserving, we're looking at the building wealth and preserving wealth, income replacement. 1. 2, a way that life insurance functions to help us. It helps in debt repayment. Things like your mortgage, so we can do a mortgage protection. Things as far as loans, credit cards, the stuff that's out there that we know we won't want to leave to anybody else. Without adequate life insurance, these debts could cause a great burden on the surviving family members. So life insurance proceeds can be used to pay off outstanding debts and prevent those financial hardships for your loved ones, and then also can keep them in a place that you love, called home, and keep them in place. It keeps them from having to move. It keeps them from having to figure it out in the moment of grief. Where am I going to live? Because now that income is gone, and I'm unable to continue to pay for where we are living if the home isn't already paid off. So these are some things that we do have to think about, because we're sitting here in all age ranges. A lot of people that we talk to, hey, we're all in it. Gen X, some boomers, some millennials, some Zers. Everybody is being impacted now, because let me insert this. Was just talking to some friends, and we were talking about some things about the increase in everything. It is almost like there has been almost like a 10% increase of everything that we purchase, buy, and have to get. Right or wrong, right or right, everything. But unless we are finding a way to increase our own bottom line, are our regular jobs, nothing wrong with them if that's where we're good, of course, because you do what you have to do and you make it all work together. But are our jobs saying, hey, we're going to give you a raise of 10-15%? Said no one ever. I mean, on a regular, it's kind of hard to hear that and to find that increase. So if inflation is prices being gouged and pushed up 10%, and we're only getting, say, on our regular W-2 jobs, 2%, 3%, 4% raise, that math is quick math. You don't have to be an ultimate mathematician to figure out simple subtraction. And that is not equaling out in our favor, because there's a deficit that we're going to have to figure out how to make up. So that's when we go back to making sure that we are doing that. What do we say? That 10-10-80 rule? Well, it's sometimes what we say tight, but it's going to be right for us if we can focus in, dig in, and figure out how we can make it go to the next level. Yeah. Use your gifts and talents to make that thing go to the next level. That's your what we say, your increase or your raise to yourself. Doing the things that you do effortlessly, that's the raise to yourself. That's that gap. That's bridging that difference right there. That's going to do it. Got to focus in, figure out how to make it work. Whatever it is, baking cakes, selling jewelry, whatever it is, figure that thing out. But like I said, another way that you can really help bridge that gap is to consider to get into the life insurance industry, because it is an amazing industry, and it is a solid industry, and it is a recession proof industry. All right, so let's move on to finish out our talk here. The last few things that we're going to look at, we said income replacement is going to help us, help our families, help us as well over time. Debt repayment, number 2. So if you have the cars, mortgages, credit cards, pay that off. Number 3, life insurance can play a critical role in estate planning by providing that liquidity, providing that money to cover estate taxes and other expenses. Because see, those taxes and things hit if we, if we have to have our things, our homes and different things sold, liquidated, and all that, the heirs can receive their inheritance without having to sell assets. Because a lot of time when you sell things, you still have to pay that property tax. Isn't that crazy? Or the inheritance tax. Let me clear that up. The inheritance tax. And that's where we go back into needing to make sure that we get our trusts and our wills together so that we can do some appropriate transfers and alleviate all of that inheritance taxes and all of that. So be on the lookout for my event that's coming up. Be on the lookout for it. And we and if you have any ideas and anybody who can jump in, with realtors, lawyers, all that, we're going to jump in and have a good time and do a series on some stuff, because I hear the cries of the people, and we need to get that together. Okay, so let's get on back with our estate planning. We're going to make sure that you have enough money to take care of that, so you won't have to pay out all this money and, like I said, get taxed. Then number 4, business continuity. If you are a business owner, listen up. If you are a business owner, the life insurance can safeguard your future business by providing funds to buy out if you share the business with somebody else, it can buy out the other person, vice versa, and compensate the business, and by putting money in for the revenue that could be lost due to your death. Businesses still need to go on. Businesses should not fold and close once a person passes away, if it's set up appropriately, if it's set up correctly. It should not close. It should not close down and falter and filter and fall out. It should continue, because there's what we call a succession plan in place, and that we had our money in place to continue the plan of the business. And yes, absolutely. Thank you so much, Ms. Deborah's good information. Awesome. I am so glad that you are gleaning something from this. And as we continue, number 5, we cannot, and as we close out, we cannot get rid of this biggie. The 5th piece would be a peace of mind. Finally, life insurance is going to provide a peace of mind, knowing that your loved ones will be taken care of financially, knowing that your businesses will be taken care of when we're no longer here. It gives people an opportunity to focus on some good things in life, instead of having to deal with the total fallout of having to take care of all these bills. They can have money to maybe, help them through the grief and the loss by maybe going on a trip or paying off the home. So that may be a big thing to someone, not even have to worry about a mortgage anymore, because there was enough money left to put a big chunk on the loan or pay it all the way off. What a gift that would be. And what a gift that is, where you can take that stress off and not add the stress on to the grief that's already there as a big elephant in the room, stressing people out, wondering what they're going to do next and how they're going to proceed, because there was nothing left in place. And the last thing to do, and I'll side note this, the last thing to do is for us to not have a will, and then our belongings are sitting in probate all in 2, 3, 4 years, trying to figure out when the state is going to release those things, and they figure it out when they figure it out. And in the meantime, we're in a bad state, because we can't plan after the catastrophe. we have to plan before. So yeah, but as a quick recap, as we wrap up, let's make sure that we know that life insurance serves as a financial safety net for your loved ones. It provides people the resources that they need to maintain their standard of living in the event that you pass away too soon. But it also helps out, when if you get too sick or something like that, and you need that for yourself. So it gives what? One, income replacement; two, debt repayment; three, estate planning; four, business continuity; and five, peace of mind. And so, in conclusion, we're looking at building wealth. It requires that planning, that disciplined savings, the strategic investing, and focusing on these aspects is essential, and it plays a critical role in long-term financial security. Now, this is a whole bunch, but we're going to have to spread it out and talk about it. So make sure that you connect with me at askayanna.com and schedule a complimentary consultation so that we can talk about your goals and needs and just build it brick by brick. And like I always share with people here, money is always talking, even if we aren't talking about it. But I want us to start talking about it and really being about things that we need to do one step at a time. And I just was reading, I saw this quote, I think it was Maya Angelou said, you can't be held accountable for the things that you didn't know before you learned them. But then I want to tack on that. After we are, courageous enough to learn them, after we sit and we hear them, after we sit and learn all about them, and then we still do nothing, then that is on us. So it's like we can't fight ourselves and feel all bad and humdrum for the things we did not know before we learned them. But once we learn them, we have to make sure we do something productive and positive about them. So this has been Ayanna Smith, Money Talks with Ayanna Smith. Remember, money is always talking, even if we aren't talking about it. Make sure you like, comment, share, and share this out with someone. And I look forward to connecting with you soon, because I have some things on the docket, and you'll see them coming out. And I want you to catch them like we're throwing footballs at a game. Catch them so we can all excel and soar together. Have a great one, and I look to hear from you soon.